The S&P 500 and the Nasdaq on track for their seventh straight quarterly advance as we close out the third quarter. But there's a lot coming at these markets. Let's get more from Jeff Kleintop. He is the Chief Global Investment Strategist at Charles Schwab. Thanks for joining us.
My pleasure. Thanks for having me.
All right, so let's talk about risks. One major issue for the markets and, frankly, to investor sentiment is this PIMCO situation. U.S. regulators looking into the unintended consequences of pulling out money out of PIMCO funds. And really, this is a broader question into asset managers in general. What kind of risks does that pose to the market? What's your take there?
Well, certainly, you could see a lot of assets move from one asset manager to another. And whenever you have that kind of turnover in the marketplace, you could see some volatility, especially in parts of the market, well, like some esoteric areas of the bond market where maybe there's not as much liquidity. So you could see some volatility there. But listen, interest rates have been pinned down here by a lot of the weakness we're seeing in Europe spilling over to the U.S., keeping yields pinned down. So I don't think we'll see a big rise in interest rates as a result of any of this turnover.
All right, let's talk about the current quarter that's ending. It looks like it's going to go down as a good one overall. What drove this market?
Yeah, a relatively modest return, though, only maybe a 1 or 2% for the quarter for the U.S. stock market. The big driver for the quarter, really softness in Europe and China. We were off to a good start. U.S. economic growth pretty powerful in Q3. Yet, as we got into the months of August and September, we started to get data that showed that the Chinese economy slowed pretty materially. First, it was some of the lending data we got out earlier in the month of September. Then the import data plunged in China. A lot of concern about the pace of growth there. That spilled over to the U.S., so we saw U.S. stock market peak out, its momentum begin to stall right around the early part of September as that data got reported. Of course, that'll be key to the direction in the fourth quarter. What happens with China?
All right, so looking at the fourth quarter, beyond China, obviously something key to watch. What else is out there? What are the big risks on your horizon?
One of the biggest risks is the pace of growth in Europe. Gosh, if you look at how fast that economy has been deteriorating, the risk of deflation, and so far the lackluster efforts by the European Central Bank, the central bank in Europe really hasn't had a lot of traction with any of their programs they've tried so far. Of course, they're now starting a bond buying program here in the as we head into the fourth quarter, and starting to really try and encourage the banks to do some lending. If that's not successful, you could expect to see further weakness spill over here to the U.S. Already, those low yields in Europe are keeping yields down into the U.S., and there's only so long we can see the U.S. decouple from the rest of the world in terms of its economic growth.
And speaking of the U.S., I mean, there is a lot of tension about what the Fed will do when, and specifically the pace of interest rate hikes. What's your take there, and how could that impact the market?
Well, we'll be getting the jobs report out here relatively soon, and that'll give us a little bit of a sense of how quickly the long-term unemployment situation is faring, how that's healing, and then also how wages are faring. One of the concerns among at least some members of the Fed is that wage inflation may begin to heat up, and that might force the Fed's hand a little earlier in hiking rates sometime in 2015, maybe before the middle of the year. We'll have to see. But at this point, with the Fed wrapping up its quantitative easing program, all that bond buying, the real focus is when's that first rate hike? We're guessing it's probably not till later in 2015.
Is that factored into the market, or will that really happen? I mean, it seems like we're kind of riding a wave where nothing bothers the market, including all this geopolitical tension, whether it's with Syria and Iraq or in Ukraine, and of course we had Hong Kong. What's your take there? I mean, what could rattle this market?
Well, we have seen a big dollar move in response to what the Fed's doing, shutting things down versus all the other central banks maybe getting more aggressive. And how far that dollar run goes may have some impact on the outlook for U.S. multinational corporations and their export growth, but not a big worry right now. But you touched on geopolitics, and that's an interesting one. And those concerns are likely to linger, whether it's in the Ukraine or Syria or Iraq or now even in Hong Kong. But it's really the unexpected that we have to watch out for when it comes to geopolitics. There's an election in Nigeria very early in February, and as we ramp up to that over the course of the fourth quarter, you could start to see some attacks on oil infrastructure in the southern part of Nigeria as the Southerners attempt to influence that election.
All right, let's talk big picture and your predictions. In terms of the global market overall, where's the leadership going to come from in the next quarter, and why?
You really want to look to China. China's a great spot. Not only might their stocks lead, but their economy may lead the global stock markets. Look, The U.S. stock market kind of peaked out and the momentum began to slow as the weakness in Chinese economic data began to be reported for the month of August. If September's data is a little bit stronger, and it may be, we've started to see better shipping traffic, port traffic in Shanghai looks better, so the import-export numbers might be good, loan demand might be better, so we might see that bounce back. If we do, could be a good quarter for the stock market, both in China and here in the U.S. as well.
And here in the U.S., what's your prediction? How will stocks do?
I think we'll see a good quarter, probably not great. I think volatility will be the key thing to watch, though. You want to buy on the dips. It's not so much where we go from the end of the third quarter to the end of the fourth quarter. It's how we get there. Often, October is a month of outstanding volatility for the markets. You may want to take advantage of the pullback that we could see and look to buy into that and ride that rally perhaps into the year end.
Any sectors to watch?
Technology is our favorite sector, and I think, it is certainly globally exposed, but it's one that really tends to do well as you start to see business spending pick up. We've seen it here in the U.S. Perhaps we'll start to see that spending pick up in Europe and Asia as well as credit availability improves.
All right. Thanks so much.
My pleasure. Thanks for having me.
Our thanks to Jeff Kleintop of Charles Schwab. I'm Bobbi Rebell. This is Reuters.